All right, so if you're someone with no experience, you're just starting off trading, I'm going to size up today's market, but this video should help you because it's going to kind of allow you to lay your eyes on, looking at, lower lows, lower highs, and higher lows in reference to structure of the market. Now, you should know that the market can shift at any given point from a bullish standpoint to a bearish standpoint back to a bullish standpoint. And you have what's called minor and major areas of structure that can be broken. We're looking for structure breaks. That's the number one thing that I have to identify before. Number one thing is to follow suit with the market direction, okay? And I can only be able to understand that by only looking at market structure, okay? So I have to figure that out first. Which way to trade, either bullish or bearish, depending on which way the market is moving and breaking structure. Now, when it comes to the actual strategy, the break of structure is extremely important because it lets me know if the market is still moving in a particular direction. So we're breaking structure. If the market structure is, or the structure of the market is bearish, then I need to be seeing when the market is continuously breaking through major swings, okay, structure points, and making new lows and then pulling back to key areas of supply, and then reverse up if we're moving to the upside. So this is how I am able to become, or have able to become profitable over time, is simply being able to first understand and read the market. All right, the strategy is kind of the latter part of it, the second part of it, but I got to be able to understand which way am I trying to identify the trade first. Then the strategy in which I trade is multi-chart confluence, higher base chart, moving down to a lower base chart, finding a setup within the zone off of a higher base chart. Please spend some time watching the videos here on the channel, and the more you spend time in going through the videos, you will slowly start to understand how I particularly and personally actually trade, okay? And that we have many people who are part of the Discord that trade just the same, all right? Some of them may have taken the strategy and kind of tweaked it their own. Some of them may have taken the strategy and used various other, charts that they like to use, or higher base charts or lower base charts. Whatever works for you, whatever you can find an edge in or on within the markets, please do so. If you're already consistent trading, I'm gonna say this right now, trade the same way you're already trading if you're profitable and making money, okay? So this video is really for those who are kind of, newbies to wanting to start off and start trading here in 2025 and learning a particular strategy. But the bigger part of it is kind of getting the direction of the market correct. So let's take a look at this. And before we do, if you're interested in joining the Discord, the link is down in the description portion of the video. And anyone and everyone that's interested in becoming an elite channel supporter, because people always ask me all the time, how can I get the trade breakdowns? How can I get the video playlist and access to the market structure video that you did? The link is down below. Okay, there's a link below the Discord that says Elite Channel Supporter for anyone that's interested. It's only $6.99. But what I do is break down trades that I posted over on the Discord so that you gather an understanding in reference to these setups. Okay, talking about stop loss placement and where to take profit at. But we have to identify the structure and identify which way to trade. That's why the trade breakdowns are so important, because I break it down so that you understand in its simplest form. Again, the link is down below in the description. So if I'm looking here at the market, all right, and I see this bullish momentum, moving to the upside, and kind of looks like a pyramid, right? Or A shape. This is the market making what? Higher highs and higher lows to the upside. The structure is bullish at this point. At what point is it going to, or can it turn to look to be bearish? Well, where the market starts taking out pivotal lows, meaning taking out buyers to the left, but also making it and swinging downwards, making lows, lower highs, and lower lows. So if we're moving to the downside, and I'm just simply drawing this up, people say, well, high, a low, a lower high. And that movement of the direction to the downside, a low, a lower high, followed up by a new low. We're breaking structure here, and we're breaking structure here. So this would be like a reversal in a sense, all right? At this point here, the market can look like it's starting to turn bearish, right? Because we're taking out buyers to the left, and we're taking out these buyers right here as well. So we're looking at things from a macro standpoint, and then we're kind of like look at it from a micro standpoint. We have to identify what's going on the higher base chart first, and then that'll allow us to really determine which way we need to trade. So if we're starting to break and take out buyer activity right here to the left hand side of the chart, and as well as we make a lower high, taking out buyers here, so we are swinging lower, taking out structure on both ends, here and here. So the market, looks to be, or starts to have a pivotal point where we go from bullish back to bearish. Now we got a new low here, followed up by a lower high. Okay, and we'll draw that, pull back with a new low. Okay, and then we get a pullback. All right, and then a new low right. Oops, sorry. Draw this correct. So this is how I actually look at the market, guys. When it comes to lower lows and lower highs, I want to see big push, from one point, from one within the movement. Okay, big push, pullback, big push, pullback, big push, making new lows. Okay, all right, pullback, and then big push, pullback. All right, so for example, right here, and then another big push down here, big pullback, another big push. Well, depending, let's see, really right here. Okay. So that's how I would draw it up in my mind, or in the charts too, just as well. When it comes to these bigger swings, we're trying to overall determine, which way the market is moving on, and that's what's going to help determine which way to actually trade. So at this point here, when we start making this kind of movement here and shifting direction, my bias shifts from looking for, or my sentiment from looking from longs, looking for shorts. Like right here, I took a long. Why? Because we had aggressive buying to the upside, pullback, more aggressive, so a buying to the upside right here. So this was a small breaker. This was well, I didn't say small, but this was a breaker structure right here to the upside. Okay, aggressive buying here to the upside. We got to pull back to this area right here. So let me kind of blow this up a little bit. And it was an actual, let me see, was it high probability? Let me take a look here. No, this is actually low probability. And so that's why I actually marked it with this yellow box here. But if we go down to the lower base chart, which we'll do right quick, I just want to show you this. There was a high probability zone within. So that's what I do when I trade, is I'm looking for zone locations first. But I got to determine which way to trade. If we're bullish, then I'm looking for pullbacks to key areas of demand. Demand is areas where the market broke structure to the upside and we had aggressive buying to the upside. The market pulls back to a high probability zone if there's a gap or imbalance attached to it. In this case here, there's not, but there was one on the lower base chart. I talk about if there's a low probability zone, okay, but it's off of a higher base chart, but we have a high probability zone on a lower base chart, then I'll still take that entry because the market can test that high probability area again. That low probability area on a higher base chart again, but then you may have a high probability zone within this zone on a lower base chart that they can tap into. I know it's a lot, guys, but you kind of got to rewatch and watch some of the other videos here on the channel to really digest this stuff and understand it, to really get a full-on scope of what I'm talking about zone within a zone, because that's the way I'm actually trading. I'm looking for, two means of confluence, because the more confluence you have, the better the trade is going to work in your favor. So if I got a zone, a higher base zone, this is low probability, for example, right? But if I move down to my lower base chart, there's a high probability zone on the inside of that lower off the higher base chart. So let me do this so you can see it quick. All right, all charts. So we'll go back to the lower base chart, which is the 24 range. So I mark up my charts first on the higher base 120. Again, this is a low probability zone on the 120 demand zone. But when I go down to my lower base chart, I have a high probability, okay, 24 range demand zone. So I have a demand, the larger box, and then a smaller demand resting on the inside of the higher base chart's demand zone. But it's high probability. Again, like I said, if I have a low probability higher base chart zone, okay, that is low probability. This means that there's no gap or imbalance attached to it, that zone. But on the higher base chart, okay, but on the lower base chart, as long as I have a high probability zone, okay, on the lower base chart that's on the inside of the high probability, on the higher base chart, okay, from the 120, then I'll take that entry, okay, because I'm pulling back to an area where there's still confluence at, and this is a high probability zone on the lower base chart. So hopefully that makes sense. But that's pretty much what I do when it comes to trading, supply and demand. But you want to be able to figure out the actual direction. Draw up, from a macro standpoint, what the market will look like, making higher highs and higher lows, and then down to a micro standpoint, like start to identify the zone locations. Mark up your higher base chart first, whether it's a supply or demand zone, right? So, for example, here, now that we're past this area here, now the market's made a low, a lower high, aggressive selling, breaking structure on both ends to the downside. Where would I be looking for a pullback if it did pull back? Well, right here. See this red line right here? I would draw my box up, simply put, on the higher base chart first, like right here, okay? And we have a gap attached to it. The gap I've talked about in videos yesterday, the day before, and lots of videos, guys. So please watch that in reference to the imbalance or gap on how I draw on myself. But anyways, I would wait for the market to pull back to this high probability zone. The gap's on that candle right there, or imbalance is on that candle. I should say imbalance. The imbalance is on this candle right here. Now, it doesn't pull back to it, but if it does, then I will be moving down to my lower base chart to see, is there a 24 range lower base or lower time frame chart supply zone that rests on the inside of this larger higher base chart supply zone. Okay, that's all I'm saying. All right, in this case here, we never got the tap, right? The market just started running to the downside pretty much after about 1 o'clock, after pulling back right here, 1:30. Then we got another push to the downside. All right, aggressive selling, pull back. All right, more aggressive selling here to the downside, as you can see right here. Now, right here, you can see where the market made it like within a swing. Sometimes you'll have like where you make a low, a lower high, and then you get a new low, right? Now, this is a slight break below this area here. It's not a lot of aggressive selling below this low right here, but it's still considered a breaker structure right here, all right? And within this swing right here, you may have a low, a smaller lower high, okay, and then followed with a new low that breaks, below the area structure. So that's an area where the market broke structure up. Could the market pull back to this area within the larger swing? So it will look something like, let me show you right quick. Like, let's say you had this push down, you had this pullback, but then you had this swing, smaller swing, resting on the inside of this larger area here, and then a swing going down. The market can pull back to that area within the swing just as well, as long as you have a breaker structure, all right? In this case here, this swing here was what actually broke this area of structure coming to the downside, all right, off of this larger low right here. Okay, so we got this swing here. But this also, like, we saw this red candle here where it broke below this low, so slight breaker structure there. Not a lot of aggressive selling coming down where it broke here, but it's still a breaker structure. It pulls back, and then we get another breaker structure coming down to the downside, right? This is aggressive selling right here, though. All right, so we got a lot of aggressive selling coming right here. I would mark up this zone right here just to see what would happen when the market comes back to it. If the market taps back into the zone, again, we're moving down to the lower base chart, which is the 24 range chart for me. Okay, I'm using 120 for my higher base and then a 24 for my lower base. So once it taps the higher base zone, I'm moving down to the lower base zone to see, is there a lower base chart, high probability supply zone resting on the inside of the larger box, which is the 120 range zone. Okay, if it is, I take the trade and I go short with it. Okay, again, aggressive selling, pullback, more aggressive selling to the downside. I marked up this here too, or mark this up here, aggressive selling to the downside, breaker structure coming down. So I would be aiming for it if it came back to this area. As you can see, the market started really being bearish today, and it really started running. So it was making swings where most times they would pull back to those areas, and but they didn't. Today the market just kept in one direction after, I guess, about 11 o'clock. And I talked about this in videos before too. 10:30, 11 o'clock, the market, whatever it was doing prior to, I'm not saying it happens all the time, but it tends to like to move in the opposite direction from which it was moving pre-market and during the opening session to up to about 10:30, 11 o'clock. You can see here, 11 o'clock, straight to the downside, as you can see right here, okay? So with that being said, if the market came back to this area, again, higher base, there's a imbalance resting on this gap here, back to the zone here. If it tapped it where it came back right here, all right, you see where it only came back and made this lower high right here. But if it came all the way back to this zone right here, I would be interested in trading if we had a 24 range zone. A 24 range supply zone resting on the inside of this zone here. That's just giving us confluence. All right, one zone within another zone. That's all it is. Giving us the confluence. Low, lower, high, breaking structure lower. Another zone markup right here. As you can see, the market pulled back right here, but we didn't tap into the zone. There is an imbalance resting on the zone as well, making it high probability. But again, we were just very bearish at this point, and the market didn't really give the pullbacks on the 120. Now, some people may use, say, a may not be using a 120. They could be using maybe a 60 range chart on the NASDAQ. Whatever works for you, that's fine. I like to use the 120. When you start scaling down and start using lower base charts as your higher base chart, in a sense, then you're going to get a lot of noise and activity and surrounding price action. Higher base charts are going to show you the bigger, give you the more broader and macro standpoint. But when you start scaling down to lower base charts, say, I don't know, some people may be using like a 60 range chart on the NASDAQ. There's a lot of noise with that on the chart. Nothing wrong with it. But if you're able to read that and it works for you, and you can take the 60 and trade with another lower base chart to mark up your or take your entries off of, that's fine. Nothing wrong with that. Excuse me. But I'm just wanting to show you, you have to look at things from a bigger perspective first. Number one, so you can determine which way to trade. Then once you've done it from a macro standpoint, then that's when you're going to start marking up your higher base chart and then mark your zones up. And then you wait patiently for the market to pull back to the zone, okay? Or to the zone, or to the zone, or to the zone. And when it does, then you're just moving down to a lower base chart, all right? Now, you know, this does happen where the market may, you know, push down and don't come back to the zones. And that's frustrating. It is, because we simply want to see it happen, but we don't control the markets, and you know, the market may not tap into the zones. Right here it did. Okay, so we look down to see if there's a 24 range supply zone resting on the inside of this zone here. If not, then we just wait patiently for the next setup, or you can move down to a lower base chart and see if you can find a setup that way. But I just want to show you guys that the same way that I did right here. You see this right here? We had aggressive buying, pullback, breaker structure above, you know, broke above. This is a breaker structure pushing above, okay? Aggressive buying. It came back here, but this is a low probability 120 range demand zone, but I had a high probability, where's it at? High probability 24 range demand zone resting on the inside of that larger zone. So that's why I traded that today, and that's the setup that I posted on the Discord today. So hopefully that makes sense, guys. I mean, this is how I became profitable, marking up charts from a macro standpoint down to a micro standpoint to give me, or to allow me to see the direction of the market. It's a very simplistic or easy strategy, but you just have to spend time being able to see things. The hardest thing is identifying, you know, the structure part of the market, okay? Being able to, once you get that under your belt, being able to read what's going on. Are we bullish, making higher highs and higher lows? And at what point, you know, because this is where people really get tricked up at, is trying to identify when does it all shift from bullish to going back to bearish. I talk about that in so many videos about that pattern, to where you see like maybe a head and shoulder pattern. You have a left shoulder head and then a right shoulder. The market is taking out, making a low, lower highs, taking out, you know, structure here, and also taking out buyers to the left hand side of the chart. We want to see buyers being taken out, okay? If we're bullish to the upside, when we're coming back down, we want to see buyers being taken out to the downside. Then we can shift from going bullish to bearish, to where we were once taking demand zones to now taking supply zones, supply setups, okay? So this should help, you know, first and foremost, kind of, you know, let you know the rundown. Look at things from a bigger standpoint, from a macro standpoint. Get that right for correct first. Higher highs, higher lows. We're going to the upside. If we start shifting and we start taking our structure lower, then the shift of the mindset or the sentiment shifts from going bullish, looking for bearish setups, where we're looking for supply setups. All right. So anyone who has, you know, no experience, it's really not you know, it's not rocket science, but you just got to spend time with it, back testing and studying things, because the market's going to do something different all the time. That is probably the hardest thing, is understanding that it ain't always going to be painted and pretty every single day. You got to be able to kind of decipher what's going on each and every day. All right. And if it doesn't make sense, I'll say this now. If it doesn't make sense and you cannot read the market, stay out until it makes the clouds clear, so you can see and have a crystal blue sky, if that makes sense. All right. But outside of that, guys, I appreciate everyone that tunes in to the videos on a daily basis. If you're not a current subscriber, please take the time to go ahead and sub by clicking that subscribe button down below. Make sure to turn your post notifications on. Gotta click that bell. Click the bell so you don't miss any of the uploaded content that I post pretty much every single day. Again, if you want to become a Discord member, it's free of charge. The link is down in the description. It's the first link. If you want to become an elite channel supporter, to where you receive the trade breakdowns, where I break down in detail these trade setups so you can gather a better understanding of these setups, okay? The link is down below. When you click on that link that says elite channel supporter, make sure to choose the second tier for $6.99. And that's going to give you, and that's a month. Okay, it's not weekly or daily. It's only $6.99. Yes, you may be saying, "No, that's only pennies on a dollar a day." It is. So because I'm not here to charge anybody any astronomical amounts of money. You just support my efforts as a content creator and a trader, and this continues to push me and fuel me to to grow this community, because I want people to understand. I'm not saying you have to trade and do it the same way I do. I'm just sharing through my own experience, sharing my experience, and sharing the knowledge that I have with individuals. So personally, just how I trade. It's up to you whether you the choice whether you want to take a look into it, peek inside, and see what it's about. If it doesn't work for you, then move on. All right. But that's all I have, guys. I appreciate it. If you do me the biggest favor before you jump off, click that like button, that thumbs up button. I greatly appreciate that as well. And everyone have a fabulous weekend. I'll see you next week over in the Discord.